G'day everyone. I'm here with Chris Walsh from Red Arrow Consulting. Chris, how you doing?
Pretty good. Thanks, Tony. And yourself?
Yeah, good. Thanks, mate. Thank you for
Excellent.
joining us. Mate, before we get into today's topic, just tell us a little bit about you and what Red Arrow does.
Thanks, Tony. Pleased to be here. It's great. So Red Arrow Consulting started off, 10 or 12 years ago as a sort of a general broad business consulting practice looking at small businesses and strategy and business planning. And then we sort of have morphed more into the process improvement using job management applications as the core for that. And so we are deeply in that space of process improvement using applications that will help you improve your processes. End of story. Love the space. And there is just so much improvement that businesses can get out of these sorts of applications. It's just limitless, really.
Awesome. I tend to agree, but I've got a vested interest. Mate, so what kind of clients do you work with?
Fairly broad range of clients, Tony. Obviously, anything in the professional services is a huge area of scope for us. But light manufacturing and some of the trade services where it's slightly more complex, those are the sorts of spaces we work fairly closely with clients
Awesome.
in business improvement. Yep.
Awesome. And based in Sydney?
Based in Sydney.
Awesome.
Yep.
But deal with clients all over Australia?
Well, as you'd appreciate, given the advent of COVID and the acceptance of things like we're doing today, it's great. But it's really interesting. It allows us to, online meetings allows us to chunk things down a little bit more rather than going on site and just blasting the client with a huge amount of information that just they're unable to digest. So we can give it in bite-sized bits, which I think is better for everybody. It's better for my insanity anyway.
Yeah, but much easier than doing 5 days of solid change management on site with the client. And you get to the Friday afternoon and they're all sick. They're done. Beer o'clock comes at
sick of you, yes.
Yeah, beer o'clock comes at about 10 a.m.
Yeah. Exactly right.
Yep. Awesome. So today we're going to talk about why job level profitability is important. It's one of the things that we talked about before. But Chris, to you, why is job level profitability important to business owners?
So I think the best way to explain this is really a story. Because the fundamental reason here is that without job profitability, you don't know what's going on in the business. And I had a consulting client that I was doing strategy for going back 10 years ago. And we knew they were losing money, but we didn't know where. And, I asked the very simple question at that stage. So which jobs are you making money on and which ones are you losing money on? And they had no idea, absolutely no idea. And so we went through the process of then vetting and implementing an application to meet their requirements. And, that just turned the business around because we could then start going, look, this type of job over here, we make screws of money on. There's lots of margin in it. These jobs over here, it's this particular client. We always lose money on this particular client. So there's a little bit of research that needs an analysis that needs to go on to get this information out. But it all comes down to being able to obtain the data out of the system to understand what costs have gone against the job, against the revenue. And there's an old system process analysis for continuous improvement. We can plan, and then we do, and then we need to measure, and then we need to review. And most businesses are pretty good on the planning. We're planning to do A and B, and they can do A and B, but they don't have a tool for measuring A and B, and they certainly don't go through because they don't have the data. They can't review it, and then they can't replan. So this is one of the tools I see for what I call continuous improvement. It's about analyzing, reviewing what went wrong, how can we make that better, and redoing it. So I think job management applications have a fantastic advantage in being able to do the structural things like quoting and invoicing. They're the sort of the systems automation part to it. But the gold, in my view, is in the reporting to understand how do we do it better. Which parts of the business are we really doing well, and which parts aren't doing so well. So yeah, it's those are my fundamentals about why we should be doing job profit reporting, and the accounting system will give you an overview of what's going on. It tells you we are breaking even, but it doesn't tell you which jobs we're breaking even on and which jobs we're making good money on. So an accounting system is a very global answer to what's going on in the business.
Yeah. So I was going to ask you about that. So do you think that it's ever a good solution to do job level profitability and try and do that in your accounting system?
I have seen many businesses try, and it's possible. It needs somebody that's extremely skilled, and you also have the problem that the systems in an accounting system is about bringing in all your costs into one point and then deciding where to allocate them, whereas a job management application sort of does it from you're building it up from the grassroots floor and then building it up. So you know where your costs are, and the costs are sort of automatically being allocated to the correct job. So yes, it can be done. I've never seen it done successfully.
You don't think I mean, if somebody's doing one or two jobs a year, maybe, if they're at the small level, is it worth the expense of a job management system?
Well, really interesting question. So, I mean, I guess there is a scale of business where, it's a bit like a builder. A builder starts off life and they have one or two projects and they can do it on the back of an envelope. And, it works. They've got a lot of control. And then that grows and grows. And eventually they've got 20 projects on the boil at the same time. And you go, and you're still trying to do it on the back of an envelope. That just doesn't work. And quite frankly, that's when some of those businesses go belly up, because they're trying to manage it like they were with one or two projects. And then they get lots of projects and then they go belly. So I think there's an element of size and scope and what have you. So yes, the smaller the business, the smaller the number of projects, yes, the more likely you are to get away with it. But I guess there was another part to this where I had another client that was being, making good money, and the performance was great. It could be better. So this was a major labor project, and to simplify what happened, we had about 1,000 hours of labor in the job. We divided it across 10 tasks, and basically there was 100 hours going each task. At the end of the job, it came in within 10 or 20 hours of the 1,000 hours that we'd estimated for the job. And everybody's going, yep, that's pretty good. Profit's going to be good. And then we went through the job and worked out that there were effectively nine tasks that came in under budget. And there was one task that instead of taking 100 hours, took 180 hours. And that 80 hours was the goal that could have been in the owner's back pocket
Yeah.
And we went through an analysis then of why. And there was a whole range of different things it was about. Wrong person, didn't have the skill sets. It was a skill set that the company probably didn't have sufficient skill set in that particular task. And maybe they should have outsourced it. The person was being pushed from about 5 different projects at the same time, so they could actually, get on top of what they had to. And there's an example where the accounting system would have said, "Yeah, that's fine," but underneath it, there was even more profit that could be extracted. And one of the interesting things is that we can't save that job. We're looking at it from it's all done and dusted then. But I think this is the goal. What's it worth to understand that you shouldn't allocate that person to that type of job in the future, that the skill set isn't in the company and we should really be outsourcing? It's not about that job. It's about every other time that situation happens in the future. And that can be worth hundreds and hundreds of thousands of dollars, particularly if it's draining, that amount of time out of the system. So, those sorts of situations are just gold for anybody that's in job management.
Makes a big difference when you can track down where that 80 hours went, and if that's you remove that cost from the job for the next one, it makes a big difference, particularly if it's a repeatable job. So following on from that, what should business owners be looking for when they're doing their continuous improvement and review using their job management system? WorkGuru, obviously, you should be using WorkGuru. When they're using WorkGuru, what should you be looking at for your when you're doing that review of the job? What's your key indicator to say we did well, we didn't do well, we can improve, we should improve, where we should improve? How do you go about that? What should they look for?
There was no fixed way of attacking that, but one of the advantages of using a product like WorkGuru is that when you're doing your quoting, it's actually 2 parts to it. There's the estimating. I'm estimating the amount of materials that go into the job. I'm estimating the time that's going into the job. And I'm estimating a cost based on that. So at a high level, at the end of the job, we can run a report saying we've invoiced out this amount and based on a quoted value of X, which is fine. So hopefully we've invoiced out at least as much as we've quoted. And if we haven't, why? And I mean, there's a simple part of it is, the amount of under invoicing that goes on in small business is huge, but it's hard to get the data because nobody really tracks that. But the job stays on the books until it's been fully invoiced out. I think the other part that we're tracking is the ability to reference back the cost of goods, either the cost of labor or the cost of materials, and the actual cost of labor or the cost of materials that were used on the job. And so we can look at it at a job profit level, which is just comparing what we expected to make in profit versus what the actual profit on the job was. And then we can drill in much deeper and understand which are the components that went out. So I'm a firm believer that every job should be reviewed on completion. At the end of the month, we should be reviewing all jobs that were completed during the month. That might be the rule. Big jobs that are out by a small amount, you might have a very superficial look at them. Big jobs that are out by anything but a small amount, you'd spend a bit more time looking at. Small jobs that are out by a little bit or even a larger amount, you make a value call about whether it's worth following through on that. But you need to come up with some understanding of what's the critical part to the review process. But I think every job needs to be touched at the end. Some jobs might only be a minute, and some jobs might be half an hour or an hour trying to understand why it didn't go to plan.
Yeah, 100%. Look, one of the things that you said there, actually, it just throws something else up for me. You said small jobs that are out by a bit, you would review. Small jobs that are out by a bit, you might review whether you even do them anymore again. Because is this kind of work profitable? We can't estimate it correctly, or there's too many variables, or the customer actually doesn't want to pay what it's worth to do this. So we do this work kind of as a being nice, and so many business owners do that. So particularly small business owners and small business, every one of us gets in, because generally speaking, because we're good at doing some kind of thing, whether it's making boats, trailers, general fabrication, whatever it is. And you end up being really good at doing that thing and then not costing the stuff really, really well. You end up finding yourself doing all of these favor jobs, or we'll do it for John, we'll do it for Kerry, we'll do it for Jenny, we'll do it for Steve, just because they're a great customer. And we've done a bunch of reviews with clients after they've moved platforms to us and looked at it and go, all those people that you say are great customers, well, when we review them on a dollar profitability level, they're 5% profit to you for a lot of them.
Well, I couldn't agree with you more, Tony. And I think it's also a matter of looking at those small jobs and going, if the small jobs are flying through, we never have a problem with them, and we're making good margin on them, fine, keep on doing them. But generally, those small jobs are the ones that take up an inordinate amount of time because they don't go quite right, and generally they've been underestimated. And we're not making great margin. In fact, we generally break even on it.
Yeah, the problem of optimism in estimating.
Well, but unless you measure the stuff, measure the time that's going into the jobs and measure the profitability, you can't even make a management decision about this because you don't have the data. So to answer your question about what size of business should have WorkGuru, it's about what's the cost in not having it? What's the cost in not knowing the stuff that we've just been talking about?
Yeah. Look, a great example of that, and I won't name names because it's inappropriate to do so, but I was speaking with a potential client this week, and they've been talking to us for a little while, and it's one of those situations where the director is sending the administration lady without the project managers or the directors or the salespeople to make a decision on the job management platform to try and figure out whether it's worth it or not, because they can't figure out whether it's worth it to adopt a job management platform or not. And this poor lady showed me a spreadsheet that she uses to manage one part of her jobs. And she's got a spreadsheet for estimation, she's got a spreadsheet for claiming, and then costs go straight into MyOb. And nowhere does the estimate match up with the claim, match up with the cost anywhere. And I'm talking about jobs that are $700,000 each. And the cost to them was ballpark is going to be $7,000 a year for WorkGuru for them. I'm like, if I can save you 1% on that job, we've paid for ourselves. And currently you don't even know what your margin is for that job. So yes, it's worth it. And they don't think it is. They're not yet come to the realization that it is worth it because they don't have many jobs and they think the spreadsheets are fine. But looking at one project yesterday across the course of an hour, we couldn't get working in their current system, whether or not they had made money, not even how much money they had made, just whether or not they had.
But you'll appreciate this, Tony, that I don't think I've ever seen a spreadsheet that doesn't have a bug in it somewhere.
Yeah.
So we're relying on these spreadsheets and treating them as gospel, but somebody's put the data in the wrong way, the formatting's changed somewhere else, and that's caused another ripple effect somewhere else. So it was working okay last week, but this week, because somebody's done something, this is the way we used to run business 20 and 30 years ago. And to be running them on spreadsheets now is, I don't know what to say.
Yep.
It's just not right. It's not professional.
Yeah, look, I always say the great thing about spreadsheets is the terrible thing about spreadsheets. You can do whatever you want in a spreadsheet, but that creates no rigor around your business process. And for me, the big determiner of whether you're going to be successful or not is whether you've got process and rigor around your data entry and your quoting, invoicing, receipts, goods management. All of that kind of stuff needs rigor, and that needs a system. And a spreadsheet just is not that.
And I guess part of it then is a spreadsheet going to be scalable for the business moving forward? it segues into another question that we were talking about, and that's about the value of a business moving forward. Um, you know, a business that is built around spreadsheets. In this day and age, I think most business owners want the security of knowing that there's a robust business process that's being developed. In the accounting world, it would be the difference between doing your accounts on a spreadsheet and the accounts on Xero. And if I was buying a business and they're both identical businesses, I'd be much more reliant on the information coming out of a Xero, the company that was up for sale on Xero, than the other one. Quite frankly, the information on the spreadsheet, I mean, it could mean anything. There's no robustness to the process.
Yeah.
So I think, a business that wants to expand, a business that you want to structure for sale at some stage in the future, needs to be built around robust business processes. And spreadsheets don't cut it on this day and age.
Yeah, and there's huge value in that. Not only the rigor of the data if you've got a job management system, but the data that a new owner can come and analyze, and they can then make business decisions based on the last 5 years. Hey, this kind of job used to be profitable, but it's not anymore, so we're going to stop doing this and do this one instead. So it massively increases the likelihood of a good transaction value for you if you can literally go, hey, here's every cost on every job that we've done over the last X years when you go to exit. The other thing that it does is it systemizes the business out of a single person's head. So when you take a job management platform and you go, here's how we quote, here's how we run a project, here's how we add timesheets, here's how we raise purchase orders, here's how we invoice, here's how we allocate materials to jobs. It's a systemized process that doesn't belong in one person's head or in one person's spreadsheet on their desktop that, God forbid, gets a corrupted hard drive. It massively reduces your key person and your process risk as well.
Absolutely, Tony. The idea of trying to train somebody on spreadsheets or whatever else, most potential business purchasers would just not treat that as a viable option. And even if somebody in a job management application is using purchasing and does it wrong, and you've got a reporting process that will pull up those errors so that you can trigger a review. There's inbuilt checks and balances in the system that you won't get in a spreadsheet.
Yeah. On that, when you have seen people move from spreadsheets or other systems to properly costing their jobs using systems and finally costing them properly, what's the biggest surprise you've seen someone get?
So the first thing that came to mind, though, was not sort of surprise, but the hardest thing for people moving from that system across is that, as you said before, on Excel spreadsheets, I can make it do anything.
Yeah.
Okay. And I can make it stand on its head. And when you move to a system like WorkGuru, there is a need to accept that there is a lot more structure in the system, and you can't just rewrite it because it's just not feasible. And so there needs to be an acceptance of that is the box that we're working with, and that doesn't matter whether you're working with the most sophisticated application in the world like SAP or something like that. You're still working within a box. The box might be a bit bigger, but it's still working within the parameters. I think the surprise is really actually a number, but an appreciation of the fact that there's a lot going on in the business that owner or the manager didn't understand was going on. Just the more granular information coming about. We thought this was going on, but in fact it's far worse than that, or it could be far better than that.
It's rarely far better. It's almost never far better.
Well, and it comes back to what you said earlier on. I think we're all over optimistic, and
I'm a developer, mate. Yeah, I can build that in 2 hours. No worries.
yeah,
6 weeks
yeah.
later, yeah.
Well, and it's that sort of thing that we always underestimate, and when we're doing our quotes, we underestimate them. It's human nature. We underestimate the amount of time that it takes to do anything. And running WorkGuru is a reality check on that. Providing you run it properly and providing you do the reviews and look at the reporting, it really does highlight that you need that reality check. And I think the other thing that you alluded to it before about a client you're working with, and I'm working with another client that's a similar situation where you've got a set of the sales department's working on a set of data in an Excel spreadsheet effectively, and the job management, which is on another system, is working on a different set of data, and you don't actually have any people. The business is working on two sets of data, and they're not really talking to each other.
Yeah,
And
single source of truth makes a difference.
well, it does, and everybody over in one department thinks we're doing fine, and the other department is saying, well, no, you're not. But we don't have one point of truth, and because WorkGuru is working right from the lead through to invoicing and reporting, you've got one platform, one reporting tool, and everybody can access the same data. So that's phenomenal, and can mean so much to a business. It means it's scalable as well. So the more complex the business is, we're still able to do that level of reporting across the organization.
Yeah, and consistency of data is absolutely key for that. I mean, I remember many years ago when I first got into the Xero ecosystem, before WorkGuru even existed, and Michael, my business partner, had installed with our consulting company at the time an inventory solution down for a client, and they got very upset because the numbers in their Xero didn't match up with what was getting presented in the board reports, and they ended up flying Michael down to explain. And it was basically the team had kept taking their old spreadsheet and turning the old spreadsheet into the board report while they were still doing everything now correctly in the new inventory system. It's Sin 7 at the time, Sin 7 and Xero. And so the board was looking at the board report and then their financial reporting and going, well, this doesn't line up, because the team, who was so used to doing things in their spreadsheets, just kept presenting the same spreadsheets, even though the financial reality was completely different. But that was the way they'd done it for years. And yeah, it was just very traceable, because it's systemized, and that business ended up changing a lot of things about the way it operated and doing significantly well out of it. But yeah, single source of truth. Without that, you can literally have people reporting the wrong things to the board because they're looking at their old spreadsheet rather than where the data actually is.
And the other thing that I love about WorkGuru is when we're working with it, if a business is take the 1,000 hours that we were talking about before, next time we did that job, the one that was out of sync by 180 hours, we might break that down into 2 or 3 tasks, so that we can then track at a little bit more granular level what's going wrong with that task, and isolate the components. And that sort of flexibility is, it is providing you being proactive about how you're using the product is huge. It's really good.
Other than moving to WorkGuru or job management software, what's your number one tip for anyone running a job management business, whether it's fabrication, construction, engineering, workshop? What's the number one tip of what they should do to improve their operations today?
Look at the job profit report. Look, as I said at the beginning, really, automation is a huge part of it, and I'm not taking away from WorkGuru the ability to automate the process, because I think that's an integral part. But as I've said to you, the gold isn't about the job profit reporting, but also there's a lot more granular reporting that we can get out of it as well. And it just depends on how deep you want to go to mine out the data. But job profit reporting is an easy report to get out of WorkGuru, and you're just absolutely nuts not to do it. And so my takeaway really is have a look at every job once a month, go through your jobs, everything that's been completed, have a look at it and determine whether everything has been in line with your expectation.
Awesome. Chris, if clients want to get in touch and get some help looking at their job profitability and moving to the appropriate job management system for them, how do they get in touch with you?
Thanks, Tony. redarrowconsulting.com.au is always a good place to go. But as a WorkGuru partner, I'm sure you'll find it on the WorkGuru website under partners. So both places work for me, and I'd be more than happy to help people out. I mean, I love this area of systems improvement, and I think WorkGuru plays an invaluable job there.
Awesome. Thanks very much for your time, Chris. Really appreciate you joining us.
It's been a pleasure. Enjoyed it. Thanks very much.